Hello everyone, I'm Larry, a professor of accounting, and in this brief video I'd like to walk through two simple example problems applying the concepts of standard costs and variances. We're going to calculate first what's known as a material price variance, and then we'll calculate a material quantity variance. These are not the only variances that one can calculate. There are other variances with different formulas that you can find in any managerial accounting textbook. But if you understand how to approach these two problems, I think that'll help you in approaching nearly any variance problem. So let's take a look at our problem statement here. ABC Products, that's our company, manufactures heavy-duty frisbees used by professional frisbee players in worldwide competitions. The standard amount of plastic used to produce each frisbee is 2 pounds. The standard market price for this plastic is $1 per pound. And last year, our company purchased 5,000 pounds of plastic for $10,000 and used 8,000 pounds of plastic to manufacture 4,000 frisbees. And we are going to calculate what's called the material price variance. Before we do this calculation and look at the formula, let's make sure we understand all of the data we've been given. We're told the standard amount of plastic used to produce each frisbee is 2 pounds, and the standard market price for this plastic is $1 per pound. We've just been given two standard values here. Where did these come from? This is based on our manager's experience and knowledge of our business. That is, we expect to use 2 pounds of plastic when we produce every frisbee. Now, sometimes it might be a little more than that. Sometimes it might be a little less based on how our equipment is working. That's not necessarily a good thing, but 2 pounds is the standard amount we expect will be consumed in plastic in each frisbee we produce. And also based on our experience, the standard market price that we expect to pay for plastic, that's our raw material that we use, is $1 per pound. You can bet that there may be sometimes we have to pay a little more, or we can get away with paying a little bit less depending on market conditions, but this is the standard price that has been established by our company. Also be very careful, we have two quantities here for pounds of plastic. 5,000 pounds of plastic is what we purchased last year, but we actually used as much as 8,000 pounds of plastic to manufacture 4,000 frisbees last year. So keep separate in your mind, there's an amount of plastic that we purchased and an amount of plastic that we used last year. So let's go ahead and do this calculation for the material price variance. In any managerial accounting textbook, you should be able to look up formulas for these variances. And this formula here, the first formula we're looking at, is one standard way of describing how to calculate the material price variance. Now, in your textbook, it may look the same as this, or these values here might be described a little bit differently. Regardless, the mathematics is the same and the concept is the same. The material price variance is equal to, and here's the quantity, AP, that's the actual price per unit of material that we paid, minus SP, which is the standard price per unit of material, times AQP. In this case, that is the actual quantity of material that we purchased for our operation during the period. Now, we've copied this formula down below and we've plugged in the numbers right here and solved the problem based on what we were given in our data. So let's take a look first. What did we plug in for AQP? We'll go backwards here. AQP, the actual quantity of material purchased. We plugged in for that number in this formula 5,000 pounds that were purchased. Where did we get that number? Well, that's in our problem statement here. It tells us right here, 5,000 pounds of plastic was purchased this past year. Not the amount used, 5,000 pounds is what was purchased. So we plugged 5,000 pounds of purchased plastic in for AQP. What about SP? What's that? The standard price per unit of material. In this case, the price per pound for plastic that we expect to pay. We plugged in for SP $1 per pound for the standard price. Where did we get that value? That was simply given to us in the data. The standard market price for plastic that we use is $1 per pound. That's what we expect to pay, and we plug that in for SP. Now, this is the part that will trick students sometimes. Take a look at AP. That's the actual price per unit of material. Do you see that we plugged in $2 per pound that we actually paid for plastic? We plugged that value in for AP. Where did we get that? Some students may not like it that nowhere in this data are we told that we actually paid $2 per pound for plastic this past year. However, we need to calculate that based on what we've been given here. We're not always told everything that we need exactly as we need it to solve a problem. So in this case, we know we purchased 5,000 pounds of plastic for a total of $10,000 this past year. Well, if we know we paid $10,000 total for 5,000 pounds of plastic, $10,000 divided by 5,000 pounds of plastic means we actually paid $2 per pound, the per unit price for our plastic this past year. And that is what we plugged in for AP, the actual price that we paid, $2 per pound actually paid. But notice we had to first calculate that based on the information we were given. Well, now we're ready to run these numbers through, and they're rather simple. $2 per pound actually paid for AP minus $1 per pound, the standard price that we expect to pay per pound of plastic, that's SP. That reduces to $1 per pound times AQP, which is 5,000 pounds purchased. The numerical answer comes out to be $5,000. But notice that doesn't complete the answer. We also need to include this word, unfavorable. The variance, the material price variance we just calculated for this past year is $5,000 unfavorable. How did we get unfavorable? Because by logic we see that we actually paid $2 per pound for plastic, whereas normally, based on the standard, we expected to pay $1 per pound. When we pay more than we expect to pay based on the standard, that is unfavorable, folks. If the logic were switched, had we actually paid less per pound than our expected standard, then we would have put the word favorable here instead of unfavorable. But that's where we got the term unfavorable next to the $5,000. Let's go ahead and solve the second problem. Now, the second problem we're going to look at uses exactly the same information. However, we're instead calculating what is called the material quantity variance. So let's look up the formula for the material quantity variance. Your textbook may show the material quantity variance formula almost exactly the same as we've shown it here. But again, if you have a textbook that shows that formula with slightly different representations for the variables, that's fine. The mathematics is still the same. So we're showing to calculate our material quantity variance, we take this quantity, AQU, which is the actual quantity of material used, the total amount used for our operation in the most recent period, minus SQ, the standard quantity of material that we believe should have been used, that's expected to be used for the actual level of production, and that quantity times SP, which again is the standard price per unit of material, that will calculate our material quantity variance. So we've copied this formula again down below, and we've simply plugged in the numbers here for AQU, SQ, and SP based on what we've been given. Well, let's see how we plugged in these numbers. Going backwards, for SP, we plugged in $1 per pound for the standard price. Well, you recall in our problem, we were simply given that. the standard market price for this plastic is $1 per pound. So that was easy. We plugged in that unit price for SP, $1 per pound. Now let's look at AQU. That we should be able to plug right in. We showed that 8,000 pounds were actually used. Where did we get that? Well, again, looking back at what we've been given in our problem, it shows we used 8,000 pounds of plastic to manufacture those 4,000 Frisbees last year. Be careful not to use the number that we purchased. We purchased 5,000 pounds. This formula requires that we insert the number of pounds that we used, and we used 8,000 pounds. So that got inserted for the value of AQU. The actual quantity of material used was 8,000 pounds. But there's one remaining variable that we need to include, and that is SQ, the standard quantity of material. That's the total amount, in this case, the total amount of plastic that we expect we should have used for the actual level of production. And do you see we plugged in 8,000 pounds for that? Well, where did that come from? We were not really given that in the problem, but we were given enough information to figure that out. If our level of activity last year was that we manufactured 4,000 Frisbees, and our standard says that we should typically use 2 pounds of plastic to produce each Frisbee, if we produced 4,000 Frisbees, and the standard says we would expect to use 2 pounds per Frisbee, just multiply those two together. That tells us we would have expected to use 8,000 pounds of plastic, if all was going correctly, to produce those 4,000 Frisbees. Once we calculated that interim value, we were able to plug that in for SQ. 8,000 pounds should have been used. That's what we would have expected to use. That's the standard quantity of material. So that required an interim calculation to get that value. This resulted in a very interesting situation. Do you see that the pounds, 8,000 pounds that we actually used, are exactly the same as the 8,000 pounds, the standard quantity we believe we should have used? Because those two numbers in this situation exactly matched, this subtraction nets to 0. So our answer is 0. In this case, for this operation last year, the material quantity variance was 0, meaning there was no material quantity variance for this case. Now, it will not always be that way. As you might imagine, there will be times when the actual amount of material used will be different from the standard quantity. That is the amount we would have expected to use to produce so many Frisbees for the year. When that happens, we may calculate a value that will be a non-zero value. It might be, say, $2,000 or $10,000. But do you remember that in addition to that numerical answer, we also need to have another word that accompanies that numerical answer, favorable or unfavorable. And how would you determine if a numerical value for the material quantity variance is favorable or unfavorable? Well, once again, it's logic. If in this situation we would have actually used more material than the standard quantity, what should have been used, we'd probably consider that wasteful, and that would be unfavorable. But if instead we actually used a smaller number of pounds than what we think we should have used, we may have been more efficient, that would have been favorable. Either way, we would have probably still looked at our operation to see why that variance occurred. But when you determine whether your value for the material quantity variance is favorable or unfavorable, just look at these two numbers. If we actually used more than we would have expected, that's unfavorable. If we actually used less than we would have expected to use, that's favorable. Folks, I hope that helps, and good luck with your studying.